Hello everybody, welcome back to my channel. In today's video I'm going to go over how you can grow a small amount of money. So let's say you have a £10 account, a £20, 30, even £50 to £100 account. You can use these methods, these strategies to grow your account into let's say a larger account by compounding your account over time. Before we start this video, be sure to smash the like button. So this video is recommended to other people who also want to learn how to grow their small accounts, and we can grow a bigger audience on the channel here. But the first point I'm going to make in this video is actually you have to realize that you won't get rich quickly in Forex. It isn't a get rich quick. You won't be able to double your money overnight. You won't be able to make £1,000 in a week with a £100 account. It's just not going to happen. And the Forex industry, all you see is cars, lifestyle, money, everything like that, and no actual trading results to back it up. All these Instagram traders are just out there trying to sell you their course, and they actually have no trading knowledge. If you put a chart in front of them and told them to make money, they probably wouldn't be able to become profitable from actually trading themselves. But as you see on my channel, I try to be transparent and I show all the wins and the losses. We're currently down on a gold trade. As you see, we are down around, a few £100 on gold. But you've just got to accept losses and realise that it isn't going to be an easy ride, especially with a small amount of money. You've got to take these small gains on your account. Slow, consistent profits are better than doubling it one week and then losing half of it the next week. It's not sustainable and you won't be able to do it long term. You'll be able to do it maybe short term. Everyone gets lucky once in a while and you catch a big move and then you get overconfident, and it's happened to all of us when we started. So don't have high expectations of getting rich quick. It does take a lot of time to actually grow your account, maybe even get to the level where you can get funded in the future. Moving on to step 2, use a demo account first. I'd say the majority of traders lose money because they go straight in with a live trading account. This is one of the ways where traders get put off from the markets, and then they think it's a scam because they've lost all their money so quickly. They just go in with £1,000, let's say, on their account, and they just blow it. They go all in on the trade, as I've seen most people do. I get messages on my Instagram all the time, people saying they've just been blowing accounts after accounts, and they've started with thousands of pounds. If you're going to start trading, you have to trade with money you're willing to lose. So say you've got £10,000, I wouldn't stick it all into a trading account. I'd maybe say put a few hundred into education at least, maybe buy a course, get some mentorship, one-on-ones, stuff like that to actually grow your knowledge, because knowledge is the most important part in education. If you don't know how to trade, then you won't be able to make money in trading. You can't just randomly put a trade on and think, oh, if I buy here because I think price is going to go up, and then it starts going down, then you won't make money. You need to react to how the markets present themselves. What does the price action look like? Don't trade off what you think, trade off what you see. The markets give off these signals where you can enter trades. And if you've got a solid trading plan, which is step 3, create a trading plan. And if you have that solid trading plan, you have the different confluences you have to have before entering each different trade. And you can work out your win rate. How often does this actually work? Say I get these 5 confluences every single time I enter a trade. How many times does that actually end up hitting the take profit, and how many times does it end up hitting the stop loss? Put this into an Excel spreadsheet or any form of journaling, maybe just write it down each trade you take. I'd recommend saving screenshots of each trade, maybe in a folder, one for each month, or I'd say Excel spreadsheets are the best way to do it, as you can put formulas in to work out your win rate, your win percentage, your total pips, and averaging out over time. Once you've done this for, let's say, 100 plus trades, you can see, is that strategy actually going to work in your trading? If overall you're not profitable from doing this, then I'd say maybe adjust the strategy, try it again for another 100 trades. I know people don't want to do this, they don't want to put in all these months and maybe years of work to trade and to actually learn how to trade, and that's why 95% of traders fail. They don't put in the time, the effort, the lost money. When you lose money in trading, it's basically just a paid lesson. You're going to university, you're paying £20,000 in student debt, and then you have to pay that back for the next however many years, depending on your salary. but they don't want to put in £500 to a course in trading because it's too risky. The biggest risk you're taking by doing this is not taking the risk. So if you take that risk, you buy the course, you start learning how to trade, then you have a better chance of becoming profitable. And as you know, trading can make you rich. Although everyone's aim when they start trading is to become rich, it doesn't happen straight away. No trader starts one week, they follow a signal, and next week they're a millionaire. It just doesn't happen. And this is why Forex has such a bad reputation. All these Instagram traders, they don't show you any trades, they don't show you any real results. They just show you the cars, the money, the lifestyle, the holidays and everything. Like if your Instagram trader that you're following or you're buying signals from doesn't show charts, doesn't show real results, then you're being scammed. Like they probably don't know how to trade either. Moving on to tip number 4, use correct risk management. I get so many people saying they've over leveraged their account. People come to me with a £500 account and they're using like 1.0 lot size, a standard lot. And you think 50 pips and your account's gone. 50 pips can happen on gold in one candle. If you're using pound yen, that can happen like that. These volatile pairs, when you're over leveraging, you can lose your money so quickly. Especially right now, as you know, all the vaccine news, the virus going around, everything is affecting the markets. You get a little piece of news come out, the markets spike. If you're on the wrong end of that and you're not using correct risk management with stop losses, risking 1%, 2% at the max per trade, then you will blow your account. You'll just eat away at your balance, and overall it's just gonna deteriorate and your account's just gonna be blown over time. The best way to actually monitor your risk management and find out which lot size to use is by using the Stinu app. If we actually look in my trading folder on my phone, we have this Stinu app. If you open it, let's say I have a £1,000 account. So you put in the account balance as 1,000. Say we're risking 1%. 1% of 1,000 is £10. Let's say we're using a 20 pip stop loss. That's quite reasonable. And then you go on to select currency pair. Let's say we're trading pound yen, so GBP, JPY, let's select that. Then you go on to calculate, and as you see here, we should be using a 0.07 lot size with a 20 pip stop loss to risk 1% of our account, which is £10 of the £1,000 account. This is how you should properly use risk management. And as you see, say before you enter the trade, you change your stop loss to 30 pips. You can clearly see here, click on 30, and your stop loss should be a 0.04, and your lot size should be a 0.04 if you're using a 30 pip stop loss, and so on and so on. You can see all the different parameters here for each stop loss and lot size. It's very easily laid out, and this is the app I recommend you use for actually judging your risk management and what lot size to use. Tip number 5 is don't become greedy in the markets. Say you've got a £10 account here. You trade it to £50, let's say in the first few weeks, using 0.01 lot sizes. That's very doable. Although you will have to be very, very lucky to be able to do that. As you know, that's a 500% gain. We've done it on the channel in the 10 to £1,000 series. If you haven't checked that out, link in the description to that. Got 11 episodes of that so far. We're doing quite well. We're up over 7,000%. But yeah, say your account is on £50. Don't think, oh, I've had 5 good trading weeks. Let's stick on a bigger lot size so we can double this account quickly now. No. I'd recommend using a small account, using the same lot size until you go on to like another level. So until you're up to £100, maybe £200, only use a 0.01 lot size. Even if you put that in on Stinu, a £100 account, £200 account with a 30 pip stop, it will just say 0.01 because that's what you should be using. Otherwise you'll be over leveraging. It's just not the best way to trade. You can easily lose a lot of money, and very quickly your account can drop to a very low balance. And once the account's below a certain amount, it will be even harder to gain it back, because then say your account's on 500, you go down to 400, and then you'll have to make a bigger percentage every trade to actually get back to that original balance. But if you go on 500, say you lose 5 trades, that's only minus 5%. Instead of losing that £100. And then say you make 5 winning trades with a good risk to reward ratio, then you're up back over the £500 mark. It's easy once you've learned your strategy, your risk management and your trading plan to actually focus then on the psychology aspect of trading. I think trading is around 80+% psychology, then 20% skill and actually trading technicals and chart work. Because if you're getting greedy in your trading because your account's on, let's say you're running £5,000 profit but you want 10,000 and you hold it out, but then your trade goes into negative, it just shows you're being too greedy. You're trying to get more out of the markets than it wants to give to you. You could have just taken out £5,000, you would have been £5,000 up. Instead you wanted to go for 10,000, you wanted more. You're being greedy in the markets. Instead, secure your profits. If you are interested in learning how to trade, message me on Instagram. I have a course dropping this month, December, the month when the WillssFX course drops, so be sure to follow me on Instagram for more updates on that. I hope you did enjoy this video and you learned a little bit, so be sure to like and subscribe, and I'll see you in the next one.